Hi and welcome to this video on ICOs and due diligence, or in other words, how to avoid a shitcoin and scams. Now, before we start this video, I want to say a short note, a sort of disclaimer. Please do crypto investments on your own risk. In this video, I merely present what I found by looking into dozens, if not hundreds of coins and projects. This is why I have to say the following. Any information shown during this video should not be taken as advice or a recommendation to make an investment decision. No liability is assumed for any use or misuse of the information presented in this video. Now that we've covered this, let's get down to it. What are we going to talk about? First, I want to give you a few examples of not so good coins or shitcoins, and then I want to talk about how to spot them, or I want to talk a little bit about a due diligence or crypto asset framework that you can use when you're going to invest in crypto assets. Now, what are shitcoins or scam coins? They look good. They look like a regular coin you can send money to. They send you tokens back, but at the end of the day, the tokens that you get are completely worthless. It's like buying shares for real money, and the shares are for dirty underwear. Now, this is a list of scam coins, just a few of them. There are hundreds, if not thousands out there. Let's talk about two examples of so-called scam coins. The biggest one that we came across so far is probably the OneCoin. It made around 350 million US dollars. And then the team got busted. They made really funky claims to replace the Bitcoin. The other one is the Earth coin. It's number 3 on the biggest scam coins list ever from Lazar, and it was basically a pump and dump scheme. Let's talk about this due diligence framework. Well, there are some due diligence frameworks out there, and mostly you can use the same due diligence frameworks from IPOs and apply it into the crypto world. Just in the crypto world, there's a little bit more to it. In fact, we are working on a whole course around proper investing in ICOs. And you can subscribe to this YouTube channel or subscribe to my blog or to my Facebook page. And we're going to launch this course probably mid-November 2017. Now, in short, a due diligence framework for crypto assets, for coins, would look like this. You check the team, you check the community, you see how is the technology stack, or for non-IT people, at least check the GitHub history, check the white paper, what is the marketing competition, and how is their business model and the legal side. Now let's start with checking the team. Well, the team will probably claim to change the world, and obviously they will do. But there is a little bit more to it. First, if it's only nerds, if it's only tech people, they won't change the world because they need business and legal and strategy and management. Well, if it's only finance guys, they will not change the world either because they would need to have tech people. And if it's only business people, they will not change the world either. So what it needs is the right mix of experts. With the right mix of experts on the founding team, that means that at least the roadmap and the tech stack and the decisions are done in a proper way. From a due diligence standpoint, it means check the team, check their background, see on LinkedIn, Twitter, Reddit, references, blogs, CVs, what you can find out about them. And if there is no red flags popping up, then the team is fine. Then we're talking about community and support. If the crypto community has a negative sentiment on the project, it's probably a scam. Now, if you are looking in Reddit, on the website, Slack, Twitter, and if you check these social media communities and they have something negative to say about this project, well, if they have overwhelmingly negative things to say about this project, then I wouldn't invest in it. Why should I give my money to something that has a very bad reputation and everybody thinks bad about it? Check the public relations. And that means, does the coin have press coverage? If it doesn't have any press coverage, it's probably a scam. Check Cointelegraph, Forbes, Bitcoin.com, CoinDesk, CoinFund.io, or maybe just Google for it. If it doesn't appear on any typical crypto media outlets, I would at least be very careful. Check out the technology. This means, is there already a prototype? Is it open source? Is it on GitHub? Can you check the history on GitHub? Well, if you're gonna invest like 10 grand into something, why would you invest in something that you don't even know? What is the quality of code and what is their tech stack? Well, if you invest a lot of money into something, then you would probably want to know what are they gonna do with the money? Where is it going to? Is the project gonna succeed? And if you don't know about the tech stack, then get someone to review it with you. Maybe get a freelancer on Upwork, or ask in communities, or look in the GitHub issues. If people make fun of the project, well, it's probably a bad sign. And if nobody is commenting anything there, it's a bad sign either. Let's talk about the white paper. A good project has a solid white paper. And this doesn't mean just the design, it also means answering a lot of questions. And how to spot a non-solid white paper? Well, first of all, they have claims without the proof. It sounds like a story when you read the white paper. And also, a bad white paper doesn't touch on any of those topics. It doesn't talk about the team or the technology or the roadmap or the token generation event, which is also called ICO. It doesn't have any references. They don't have any governance or have just very little governance. The product description is bad. Market research is bad. And then there's the big, what is the actual problem they're trying to solve? What is the problem that this product is for? If those things are not answered or very vaguely answered, be careful. Then we talk about market size and competition. Well, what is their go-to market strategy? And what is their market actually? What are their competitors? Research a bit. Google is your friend here. Just see what they are trying to solve, put it in Google and see what pops up. Are they aware of the competition? What is their differentiator? Why are they better than the rest? On the business and legal side, a lot has happened in the past few weeks. And first of all, they have to determine if they're a security or utility token. It's a very hot topic. And you have to be certain what you're going to buy into. What rights do you have with the token? And the question here is, are you going to buy into a token and the SEC is seizing everything and then all your money is gone? Did they cover the legal side of it? Do they have a clear picture and disclose of the legal state of the token? Where are they incorporated? Are they incorporated? And who are they marketing their token to? Are they marketing it to US people? Are they just marketing it to accredited investors? Are they marketing it just to Russia, to China, to Japan? That's a very good question. And you should have a very clear picture on that too. Then let's talk about the token value. Does the token value likely increase over time? And why is that? That should be stated in the white paper. Is it a limited supply? Is it deflation? Are they burning the tokens? And so on. If it doesn't increase over time, so if the value doesn't increase over time, why are you actually buying into that token? Why are they using a token anyways, instead of just using Bitcoin or Ethereum for their product? So those are very good questions that you should have a very clear picture on before you're investing into it, especially the token value. Lastly, how to determine scam ICOs. That mostly boils down to look at how the crowd sale contract is laid out. How is the logic of the crowd sale contract? First of all, there is no guaranteed profit. If somebody is claiming they have guaranteed profit, then just be careful, just walk away. That's my personal advice. If the ICO is giving discounts, that's very normal. So the earlier you usually get into the ICO, the more discount you get or the more tokens you get. Like normally you get, 10 tokens for 1 Ether. And if you buy very early, you get 15 tokens for 1 Ether. So that would be a discount, which is fairly normal. And watch out for overvaluation. And that's something along these lines. This project is already worth billions. Invest now as little as 10 Ether and become rich overnight. If you hear something like that, oh my God, walk away. Lastly, I want to give you a very good link that I found was very helpful for me. Vitalik has written a very good blog entry on token sales. and you should go at least scan over it. If the crowd sale you're trying to take part in is structured in one of those ways, then it's probably very good. One very bad example that I found recently was successful is the Filecoin. They gave huge discounts to their own board and advisors, and at the end, the normal people, they had a very, very bad valuation on the tokens. Now, lastly, I want to cover what is pump and dump. Well, Investopedia writes on this. Pump and dump is a scheme that attempts to boost the price of a stock through recommendations based on false, misleading, or greatly exaggerated statements. The perpetrators of this scheme, who already have an established position in the company's stock, sell their positions after the hype has led to a higher share price. This practice is illegal based on securities law and can lead to heavy fines. How does pump and dump work? So, first, someone claims a stock, or a coin in this case, will break out. That means it will increase in price. Oh my god, this coin will go to the moon, or something like this. Someone else, supposedly someone completely different, supports that claim. And a third person and the group heavily buys into the coin, and the valuation rises very fast. It looks like the coin is really going crazy. Oh my god, you have to buy in now and you will lose a lot of money if you don't do it right now. And as soon as they have enough support from other people outside of their group, they sell. The coin bounces a little bit up and down, but they essentially bought low, sold high, and they are gone with your money. And this is a very simple example that I just wrote down how this looks like. So we have an accumulation phase, we call it, where they're gonna buy a little bit of the coin over time with a little price. And then they are going to advertise it. They're going to be like, oh my god, look at this coin, it's going crazy, Have you seen that coin? Oh my god, you're gonna buy it now. Oh my, I buy in too. And the second person, oh my god, yeah. And the third person, yeah, I'm gonna buy in too. And then other people see that and they're gonna buy in over here. And more will buy in here, and the group of people that accumulated the coins over time, they start selling. Whoop. What happens next is more people outside of the group see this part here, and they think, oh my god, now is the right time to buy in. And they buy in, and the group sells more. And at the end, they made a nice margin, and the rest of the people are the losers. A last fear on missing out tip, a FOMO tip. Be careful when someone is hyper excited about a coin. It's also called hype marketing. Be careful for FOMO. It means fear of missing out. If you have the feeling you need to buy right now because anytime later it's, oh my god, too late, don't buy it. Now let's talk about the ICO KPIs in this overview. Now you can get a clear picture after this video. First, look at the team. Look at the history, the right mix of experts on the team, and so on. Then the community. Is the project popular? Public sentiment. How is the press coverage? What is social media writing about it? How is the website structured? And how is GitHub, and so on. So have a look at that. Technology. What about the prototype? Is it open source? Do they have a history? Is there any activity? How is the code quality? How is the tech stack? Download and read the white paper. Writing a white paper is not easy, and if it answers all the questions on team legal, roadmap, competition, and so on, they put a lot of time and effort into that. So probably it's credible. Then, is the business and legal side covered? First of all, is the token an equity or utility? Why do they have a token? Where are they incorporated? Who are they marketing to? Why is the value increasing? And then about the ICO event. What is their crowd sale type? Is it an auction? Is it a fixed price sale? And is it fair to participate for you? Or are you just buying into because there's big advisors on the board? So this is what I do. I assign each of them a number between 0 and 5, and then I get a clear picture of the token. If the number is very low, I don't buy it in. If the number is very high, I buy into. And how to get tokens? First, you want to find the project you want to invest in. Either you have heard of one, or you can find tokens everywhere on the internet, for example on the tokensaleCalendar.com. Do the due diligence. Is the token looking good or bad? Do I want to invest in it or not? Is it very risky or is it very safe bet? And then have a look at the token generation event, which is the initial coin offering. This is where you probably have to send Ether or Bitcoin to an address and receive token in return. So what's next? We are preparing a course on successful due diligence with ICOs and how to invest in ICOs successfully. Also, subscribe to my YouTube channel, subscribe to my blog, and like my page on Facebook. Well, thanks for watching and good luck on investing.